Actually, I wanted to understand in specific sectors also. Auto has been in the top gear for the last so many months, but then we did saw some pressure this week, and majorly because of a lot of action from the primary market and maybe some profit booking. But then, how to tread this sector from here? Because we already the sector is trading above its 5-year average. We understand the reasons like SUV, which has that's one choice, which has spurred the volumes, and now rural demand also coming back in two-wheeler, tractors. How should one approach? Can we have a can we have a unanimous approach for the entire basket? We need to be selective for different spaces. How would you advise investors here?
So I think when you come to auto, right, the view needs to be a bit nuanced. And our view, say, for example, is quite different in terms of a shorter-term perspective versus a longer-term perspective. So if you're just seeing what auto has done over the last year, right, and momentum which is possibly expected to sustain in the current year, this is actually being driven by a demand recovery that you're seeing off kind of COVID lows. Last year, auto numbers were pretty strong. You are expected to kind of, with the rural economy coming back, potential consumption kind of sobs in the budget. I think auto demand is expected to remain reasonably solid. And from that perspective, auto could continue to perform in the current year. Now, within auto, you probably need to cherry pick in terms of what segments you're looking at. So say, for example, if you're trying to play the rural recovery, so someone like a Hero Motors may be a better place. I think two-wheelers is a space which could see a little more interest in terms of the overall recovery. However, the moment we look at auto, we are a bit concerned from a longer term perspective. The main threat here is that the whole transition towards EV is really going to change profitability dynamics for the sector. Market shares could shift quite significantly. You may have new players emerging. Now, what the shift towards EV is going to do towards the profit pool and who the winners are, I think is not very clear at this point in time. So the moment auto companies start trading at higher valuations, we start getting a bit concerned that you are not really factoring in this longer term disruption risk. So really at this point in time, we tend to look at auto more as a cyclical recovery play as compared to a longer term fundamental holding.
If you like this video, then like, share and subscribe to ET Now.